Now we are going to talk about reversal techniques. See, the reversal trades are the most riskiest way of approaching a market. You should understand that very beginning, because there is already a trend and you are betting on that the trend would reverse. So the probability of success of reversal trades are normally little bit on the lower side than the swing trades or the trend following trades. So these are the difficult trades. You should always maintain stop loss and a favorable risk reward ratio. What is risk reward ratio? Suppose you want to get into a stock for 10 rupees move, then your stop loss should be much lower than that, maybe 3 rupees or 5 rupees or 6 rupees, so that even if you are 50% time correct and wrong, overall you make some money. Now let me give you an idea. One way of approaching a reversal trade is looking at divergence. Here I have shown you the RSI divergence. The RSI divergence I have spoken about when we were discussing the RSI in detail. Here it is the repeat of the same thing when you see a RSI divergence and eventually RSI breaching the swing lows. Here price was moving higher, the RSI was showing divergence, it was not making higher highs, and eventually when the swing low was taken out and also the price moved below the trend line, the swing low was here. So you could have taken short position somewhere around this point when this swing lows of the RSI previous were taken out. You could get into trade on the downside and you could see how beautifully you could have gain in the down move. Similarly, let me look at the Nifty chart. See, again there was a divergence and you could have got into the trade when this pattern was broken, or also when the swing high, that is this high, was taken out in RSI around this. This is the same time when the double bottom neckline was also breached and you could have taken the trade and traded on the upside. See, this was a bullish divergence, but once again, see, there was a bearish divergence here. Price was moving higher and the RSI was showing the divergence. Here also there was a divergence. These two divergences didn't work because price eventually moved higher. So I have shown you with the RSI, you can use RSI and MFI or any other indicator that you wish, but always remember that some of your divergences won't work, they may fail. So always maintain stop loss and take trade once there is a confirmation. See, here there was a false confirmation because the swing low of this RSI was actually broken, and see, the price didn't breach the trend line. So you could have been a little bit on the cautionary side because if you had to take the trade. But even if you had taken the trade, if you had maintained a stop loss around this, your loss won't be much. Again, in this case, see, there was divergence, but eventually these swing lows were not taken out. So there was no question of taking the divergence trade here. So that is how you can refine your understanding or observation of the market a little bit and avoid those trades which are not very much promising. Another way of taking divergence trade is using the Bollinger Band and the MACD and looking for the M tops and W bottoms. So when we are looking at the Reliance Capital chart here we can see this is a very good M top. First there is an up move and the top is outside the Bollinger Band. See, again a little pullback and then again a little up move, and now you can see that this high was not above the previous high and also much below the Bollinger Band itself. Now in this scenario, when the price goes below the mid Bollinger Band, you can take trade if there has been a negative crossover. See, the MACD then at that time had a negative crossover, so you could easily take that trade in the downward direction and see how the trade behaved. The opposite happens when you see a W bottom. Here you are looking at the Reliance Capital. See, here the first down move in the first thrust, the low was beyond the lower Bollinger Band. This is a 22 period Bollinger Band, as you can see, and the moment you see that the previous, after this pullback, this low was within the Bollinger Band. So, the moment the previous swing high around this point was taken out and price was also above the Bollinger Band, you could have taken a long trade, as MACD was already in the positive crossover zone. Now, this is very important. All these conditions should be fulfilled. What are the conditions? There should be M top or W bottoms. Price should eventually go below the swing, intermediate swing points, here this one, here this one, and price should move below the mid Bollinger Band in this case and above this case, and corresponding the MACD crossover should have been there. Here in this candle there was already a crossover because the MACD line has gone below the signal line. Here in this candle there was already a crossover and you could have taken this trade. Let us look at one more example. Here we are looking at the TVS Motor chart. See, there was a very beautiful M top here. First it was outside, next one was outside again, but more or less at the same level. Now eventually what happened? The swing low was taken out here and the price moved below the mid Bollinger line, and see, there was a negative crossover by this time also. Now see what happened? The price moved lot lower. So this is a way one should have traded. Now they can fail also. I am trying to show you here. See, there was a beautiful W bottom. What happened? First low was beyond the Bollinger Band and the next low was actually within the Bollinger Band. The up move happened, the swing high was taken out and the movement of above Bollinger Band happened and MACD crossover had happened by then. But eventually the price actually moved lower. So your stop loss, which might have been the latest swing low, had been taken out by this point of time. So when you are gaining this much, when you are losing this much. So this is important to understand, that when you want to trade, you should be trading with the discipline, and the trade in which you should gain a lot compared to the amount you lose in a losing trade. So now we have discussed about the reversal trades. Remember, reversal trades are risky, so have your stop losses. Now we will be moving to swing trades.